Hello, my name is Chase Rose. I'm an associate wealth advisor here at Hixon Zuercher Capital Management.
And I'm Jordan Shaw, also an associate wealth advisor here at Hixon Zuercher Capital Management. We're here to give you a monthly market update for the month of September, looking ahead to October. I'll pass it back to you, Chase. Give us those performance numbers.
September is historically the worst month of the year for the markets. And it did begin the month in that way with that expectation to finish out as well. However, the strong market run that we had through the second half of the month really helped the market, rose the market levels up, and finished very surprisingly, a pleasant surprise towards the end of the month. So the S&P 500 in September up 4.3%, Dow Jones up 3.5%, the NASDAQ, think tech stocks, up 6.2%, small caps up 3.9%, developed international markets up 3%, emerging markets, so a little underdeveloped international countries up 7%, so leading the way in the month of September, and bonds up 1.3%. So across the board, excellent performance in the month of September.
Excellent performance, yeah. Those international stocks, not usually
really starting to pull their weight now
well in September.
Yeah.
Awesome. Hey, go USA and everyone else. Not so good for USA is student loan debt for the month of September. There was a 1-year period where you did not have to pay back your student loan payments.
I feel like it's actually been longer than that. It's been quite some time.
It's actually, it's been about 4 years. That's true. So the pandemic, you didn't have to pay it back, but there was a 1-year period where
it was like a grace period
late payments weren't reported to the credit bureaus. Yes, thank you for correcting that.
Of course.
But then at the end of September, that period is done. So make sure if you have student loan payments that you start making those payments.
Yeah. You see, this is grace period for students, and it's really in place to help them transition into making their payments. But really, if students aren't aware of the grace period at all, that could just be used to not making payments, and continuing to do so could be very detrimental for their
4 years.
future.
Like a habit takes, 38 days?
Something like
to
that.
set in. So after 4 years, you are probably in the habit of not making your payments. Yeah,
I would say. All right. We did make a note on this last month, but as expected, the Federal Reserve began their rate cutting cycle during their meeting in September, announcing a 50 basis point or a 0.5% reduction in the Fed funds rate. This rate is the basis for other interest rates, broad interest rate movement in the market. So don't be surprised if you begin seeing rates come down, whether it be, if you have a car loan, if you have personal loans, a mortgage, obviously, and even your money market rates for cash, CD rates, and things of that nature. All rates across the board will begin moving downward based on the Fed's move in September. So that's where we're at now.
And it won't be exactly the same.
It's never going to be a 4% decrease. That 0.5% is just the basis for banks to borrow money from other banks overnight. And so they pass those rate changes through different loan types to the consumer, and also in their savings methods as well for consumers too. So it'll just be marginal changes. It won't always be the same rate that the Fed is cutting their rates. So
though that'd be nice.
It would be. Yeah,
it would be nice. But the economy's too complex to make one-to-one like that.
Unfortunately.
But speaking of mortgage rates, with that, the Fed cut has brought it down, not 50 basis points, but it's leveling out in the month of September. Around 6.3 was kind of the average. Earlier in the year and last year, I think it peaked around 8%. So it's looking better for home buyers, especially first-time home buyers. Maybe a little easier to save up a down payment if the rate's a little cheaper. And the annual income needed to afford a median-priced home, and I'll give the median-priced home in a second, but the annual income needed to afford it right now in America, or in September, the month of September, is down because of the drop in rates, down 1% from the month prior to $115,000. So still in the six-figure range, well into the six-figure range to afford that median price home, being $416,000, which is up from $412,000 in the second quarter of the year. So all those numbers, if you're ready to buy a house and you got the money, go buy it. But that's where things are at.
Yeah, it'll be certainly interesting to see how these rate cuts affect the economy. Obviously, because the whole reason the Federal Reserve raised interest rates in the first place was because of inflation. There was huge inflation in things like housing, where mortgage rates were so low, people were buying up property anytime that they could. So with rates coming down, it'll be interesting to see if the buyers start flooding the housing market again. Hopefully, the inflation does not increase as it did last time, but that'll definitely be something that the Fed is monitoring moving forward.
And supply and demand. There's more houses being made available now, too.
Absolutely.
So that will help.
Yep, there's a million factors going into it, but we're monitoring that on a daily basis. So, about a year ago, we like to poke fun at Austin. But about a year ago, he had a saying that he was using around the office, and that saying was "cash is trash." And I probably just tuned it out at some point when he said it so often. But the thesis behind that statement is, about a year ago, the Fed ended their interest rate increase cycle, right? So the Fed funds rate was increasing, and ultimately they had the last increase in that rate cycle plateaued. And the thesis behind that statement, cash is trash, is that when the Fed is complete with their increasing or their tightening cycle, the market and even fixed income, so stocks and bonds, typically perform really well 1 year forward. And so I am here today to report on Austin's thesis, either if he was correct or incorrect. But as you've probably gotten the theme over the last 12 months or so, the market has performed very well, being up 36% 1 year after the Fed stopped raising rates. And bonds were also up 12% over the past year. So if you had a 60-40 portfolio, a very balanced portfolio in your investment account, you would be up 26% 1 year after the Fed stopped increasing rates, which historically is slightly above average, but still, that's been the thesis that's played out in the past historically. And certainly I'll have to give Austin his credit. He was right in that thesis. And it still carries forward as well, because rates, as we just mentioned earlier, are starting to come down. It's not always carried through the decreasing cycle, because oftentimes that accompanies a recession. If the recession doesn't happen, markets perform well. If recession does happen, the market does not perform as well. So that remains to be seen, but that's just some data on the whole Fed funds impact on the markets.
All right.
So,
cash
got a little
trash.
long-winded there, but yeah, cash is trash. Remains to be seen if that will continue moving forward, but we're optimistic about it.
Another thing that is trash is hurricanes, specifically Hurricane Helene. Everyone has heard about it. September 26th, it made landfall and it devastated the Carolinas, Georgia, Florida, Tennessee, Virginia, and other areas. And currently over 200 confirmed deaths. So that's horrible. Hundreds more unaccounted for. And this is an interesting tidbit I found. Michael Jordan and his racing team, didn't know he had a racing team, donated $1 million to North Carolina because of his affiliation with North Carolina for relief efforts. So I thought that was interesting. He's worth a little bit more than $1 million, but I don't think we can get mad at him because he is at least giving some of it.
Of course, yeah.
Away.
I'm sure he is appreciating the tax deduction there.
Probably, yes.
All right. So I've been very market focused on some of my news stories today, and I will continue that. So as September's passed us, we're now moving into the fourth quarter, which historically is the best performing quarter of the year when you're looking at average returns in the past. October typically is positive around 60% of the time. November and December, both positive on average over 70% of the time. So we're very optimistic. However, one caveat to that is during a presidential election year, October is actually historically negative on average. So, we are optimistic for the fourth quarter, but as we approach election day, we do expect there to be some volatility.
It's going to be bumpy.
Certainly, past performance is not indicative of future results, so we'll continue to monitor on a daily basis. But just be buckled up and ready to go. We do want to remind, as we always do, when you have this investment portfolio that you have invested, you're not investing in the Oval Office, right? You're investing in tried and true American companies and global companies that have grown their profits despite who has been the leaders of these nations. So buckle up, be prepared for some bumpy waters if they come. But typically speaking, post-election, the market does perform well. Not a promise, not a guarantee, certainly, but that has been a theme in the past.
But we're hopeful. We'll see what happens.
Mm-hmm.
Along those lines, the presidential debate was earlier last month, and it just kind of pushed things along. September wasn't really too newsworthy in terms of the election cycle compared to the months prior, which is fine with me to get a little bit of a break. But yeah, neither party really pulling ahead. It's kind of even keel right now, so come November, we will see what happens.
Yeah. And I will make a comment. Obviously, this is a September review, but October 1st was the presidential debate. And there is an overwhelming agreement that it was refreshing to see different people up there debating on the stage with more civil tactics and more, I guess, not as cutthroat to each other party. So that was definitely refreshing to see. But it will definitely have to monitor the impact on the election results moving forward.
I've heard people enjoyed it almost as much as they enjoy our market update. That's the news.
Yeah, that's a good way of putting it. We'll keep this one nice and lighthearted. But the Florida news story of the month, there was a Florida man who was arrested and accused of throwing a chihuahua off of a balcony like a football. And that's not like it's not a crazy story by any means, but I did want to tell that story to highlight the fact that anyone who has been around a chihuahua has definitely had that exact same thought come across their mind. This guy just happened to let his intrusive thoughts win.
It would have been easier to kick the chihuahua, I would think.
Yeah, maybe. It depends on if you're...
chihuahua in your hand.
Yeah. Depends on what your ideal position is in football, if you're a passer or a
That's
kicker.
true.
Yeah. Okay, but I do want to, for all you chihuahua lovers out there, I know you're probably worried the chihuahua is expected to be okay. It did break a leg, but it is healing well. So
if it was a cat, it would have been fine.
Yeah, it would have used one of its lives and it would have gone with its day. So yeah, there we go.
And lastly, another wonderful 32-year-old man named Norton Havoc. I don't know where this took place. I'm imagining somewhere in the States.
Probably.
This probably was in Florida. He blew his nose in the shower and ended up blowing out a Lego block that he claims has been stuck up there for, wait for it, 26 years. So, needless to say, he's very happy he can breathe out of both sides of his nose now. Yeah, I don't know how I feel about this one.
I have so many questions.
Red flag on the play there. I don't know. It seems like a lot of unnecessary details. Why did we need to know he was in the shower blowing his nose? But whatever. 26 years with a Lego block up there?
Safe to say he's had Legos on his mind for a long time.
Yeah. The article said he could smell colors. I don't know. There's too many things going on.
That's weird. All right. Well, anyways, thank you for joining us today. As a reminder, nothing that we discussed today was advice or financial advice. But if you do have any questions about your personal situation, give us a call here at 419-425-2400, or you can email us at hello@hzcapital.com. Until next time, Chase and Jordan, enjoy your month of October.
See ya.